thank you to those of you who are joining us today to hear from the Artisanal Spirits Company. They announced their full year results yesterday, on the back of which we have published a note. You can find that on our website at Equity Development. Otherwise, we are going to take a canter through the presentation, led by Andrew Dane, newly appointed as CEO, and Billy McCarter, who's in as interim FD. There'll be an opportunity for Q&A at the end, so please feel free to submit questions as we go along. Otherwise, gentlemen, over to you.
Thank you very much, Anne, and thank you all for joining us today. It's a pleasure to announce the results for the Artisanal Spirits Company for 2022. And this is a reminder of who the Artisanal Spirits Company are. We are about creating and selling outstanding limited edition whiskies around the world. And we primarily do that through the Scotch Malt Whisky Society, which turns 40 this year. Now, the Scotch Malt Whisky Society is a premium, direct-to-consumer e-commerce business that you'll see as I turn over into the next slide, delivers outstanding limited edition whiskies to a worldwide fee-paying membership. Now, how do we do that? Well, we procure whiskies from a wide range of distilleries. We're not a primary producer, but we've released whiskies from over 150 different distilleries to date. It's 155 at the last count. But we own and we mature those casks ourselves, with 16,500 casks maturing today. And we're creating an outstanding and unique range of flavours, with additional maturation allowing us to release almost 1,000 different whiskies last year. Now, we bottle those and under our own brand. So people buy Scotch Malt Whisky Society whiskey, and we sell those exclusively to our members around the world. And we're about more than just being a shop for those wonderful and outstanding bottles. We're also about the experience that goes with that. And it's the range of experience from someone enjoying a dram at home, to having a drink with friends, to joining one of our events or tastings, or attending one of our 4 outstanding member rooms in the UK. One in London, one in Glasgow, one in central Edinburgh, and the spiritual home of the society at the Vaults in Leith. And as we go through the presentation, on the next page will show you the strategic framework, which is the basis for how we operate, how we think. And at the top of page 5, you'll see our purpose. That's about captivating a global community of whisky adventurers by revealing the magic of our outstanding whisky. And as we go through the presentation, you will start to see some of those elements coming through, and it's the anchor around which we operate. So Hannah, are you able to turn over into the next slide? And you can see that, as I said, we're about creating and selling those outstanding limited edition whiskies within that framework. And as we go through the presentation, you will see those strengths coming through of our pioneering model, being well placed to take advantage of that long-term global growth opportunity, and the fact that we are a robust business and we're primed to deliver. So that's the preamble. And on the next slide, I'll give you some of the headlines on figures for the year. And I'm pleased to say it's been a really good set of results, both financially and strategically. From a financial perspective, double-digit revenue growth, membership growth, and importantly, that's profitable growth with expanding margins, giving us a good first step on our path to profitability, with adjusted EBITDA up by £1 million, slightly ahead of expectations for where we would be at this stage. And importantly, that represents almost a 30% EBITDA margin on the revenue growth this year, giving an insight into the kinds of profits we can generate in due course. But we can't do that without that membership, which continues to grow. And really pleasingly, particularly in the context of wider uncertainty about cost of living, etc., has maintained an all-time record high retention rate of 77%. And that combination of a global, loyal, highly engaged membership, combining with that high margin model, gives us a substantial member lifetime value of almost £1,500. And then on the right-hand side, our outstanding asset backing for the business. We now have 16,500 casks, with a notional retail value of almost £500 million, £500 million. And what that means in practice is, if we took all of the liquid in all of our casks and poured them into bottles today and sold them at today's average selling price, it would have a retail value of £493 million. And what we've been doing over time is we've been investing in more great casks, but also we've been buying them as new make and young spirit, because whiskey is an appreciating asset, typically going up by double-digit amounts in value every year. I'm pleased to say, as at the end of this year, almost half of the stock we own was less than 3 years old at the time we purchased it. It's obviously much older now. And that's the same great quality spirit from the same great distillers, just bought younger, so we're capturing more of its value over its life and giving ourselves that unique and outstanding range. Billy will maybe just bring some of the numbers to life.
Yeah, and also I can take a couple of minutes just introduction to myself. So I've been with the business for a year now, and it's a pleasure to step in as interim FD at this time and share the results. A bit about my background. I spent around 8 years with Diageo, so know the whisky industry well, and worked in it within Diageo. And I've also worked in a couple of smaller businesses, so fantastic fit with artisanal business, and certainly gone well the last year. So as I say, it's a privilege to be here to share some of the results. So, and if you're able to, when you keep going, we'll go to slide 7. As Andrew mentioned, it's been a great year. We've met expectations at revenue level. We've beat expectations at an adjusted EBITDA level. We've seen membership growth. At a global revenue level, our delivery of £21.8 million, you'll see there is a diversification across geographies, which is fantastic. As a business that therefore allows us to mitigate risk to a certain degree. We're in some key geographies and believe those are the right geographies to be in. And if I was to call out some of this outstanding performance in the year, if starting at the top, UK venues and events, 59% year-on-year growth. Now, it's important to remember that 2021, the beginning of 2021 was impacted by COVID. So the benefit, or what we're seeing there, is the rebound from that. We've seen a strong year, and to give a bit more of a flavour, we've seen that continue into this year with some outstanding performance in December, January and February, each of those months representing the best performance in each of those months compared to prior years. That's a fantastic achievement. China, 28% growth, as you can see, after UK venue events, the biggest on that slide. China did go through tough COVID lockdown policies last year. They've now come out of them, which is good, and hopefully they'll continue to do that. But in that period, we've seen a real engagement from members around buying whiskey and the importance that plays for them. So that's fantastic. If I was to call out one more on the slide, Europe, as we bounce back from Brexit challenges and customer service issues in the old of 2 to 3 months delivery, it was a key focus for the business. We reacted quickly at the end of 2021 and have really started to improve that customer service. So now down to normal lead times, which is fantastic. And the key thing is there's 18% year-on-year growth, but what we're starting to see is the recovery back to the levels pre-Brexit. So we've also seen an increase in membership in Europe. So everything in Europe is going in the right direction. So that deserves a call out. Yeah. Then if we move to the next slide, Hannah, just look at that revenue in the context of the wider P&L performance. As Andrew mentioned, that revenue growth has helped us deliver a bottom line adjusted EBITDA of 0.4 million, which is a swing of £1 million year on year, which is fantastic. If I was to cover kind of 2 or 3 key points in there, we've mentioned revenue increase of 19%, gross profit delivery increase of 23%. So what we've got from that is some of the early stages of our strategy to buy more new make spirit at a lower cost than mature spirit. So that will start to flow through with lower liquid cost. Going forward, that will remain. And also now we've brought on a new Masterton Bond supply chain facility. We're now an all-encompassing bottler. We do our own bottling. We will not use, I won't say we won't use any because there's a risk mitigation element in there, but primarily we will bottle our own spirit, which is a fantastic achievement for a business as we go on a growth journey, but that will also help our gross profit. So that's therefore delivered to the bottom line. Only other call out would be we have invested significantly. We've used IPO funds and RBS funds to really improve and grow our business from a systems and people point of view, making sure we've got the right experience in the business. We're now at a stage from a payroll perspective that will mature out as we have the people and teams in the business to make sure we deliver future growth. So going further forward into future years, where our revenue growth moves up, our payroll will plateau a little more. So that's where more of the bottom line delivery will come from. Thank you, Hannah. We move to the next one. This on the page is really something we use internally to make sure that we are engaging our members and giving members what they want. Members are the lifeblood of this business. And what we can see is the lifetime value is there. So we still have what people want, essentially. Our lifetime value has moved up 1%. That movement necessarily isn't around what percentage it goes up each year. It's about making sure this will tell us that we're still giving members what they want. Are we seeing membership growth? Are we seeing sales? And this is what this does. So some key call-outs on the page, for example, would be growth in nearly all membership areas. If you look at the total or year-end membership growth, plus 12%, average members plus 20%. We've got a strong retention rate, as you can imagine, is a key KPI of us defining how we're performing from a customer service level, is ultimately, are we retaining the customers that we have? And we are. That's maintained at an all-time high. So this is just a slide to give a bit of insight to the internal business, say, are we doing the right things? And if this comes off course, then we can react appropriately. But needless to say, this is performing well. Thank you, Hannah. The next one. This one, there's a few numbers on the page. I think the key thing to call out on the left-hand side in terms of balance sheet is we have a strong balance sheet. We have £22 million of net assets. The biggest number on there clearly is a cash spirit of £23.3 million. As I said 2 minutes ago, we've utilised the finance that we have to ensure we have the cash stock and the right portfolio of cash spirit going forward. At this time, that stock will see us through 100% bottling for at least the next 5-6 years and 75% into the next decade. So I think the key point on this slide, without going into the number, is we have what we need to grow. We have not only the stock, but also the strength of our balance sheet allows us to work with partners like RBS and the revolving credit facility to make sure that we have the necessary funds to invest. And that's why we believe strongly in our growth journey over the next few years. Okay. Thanks very much, really, Andrew.
So that's a bit of an update on kind of current trading. And then when we talk about strategic delivery, set it in the context of our 3 key strengths as we see them. First of all is the pioneering model that we have. And that puts us in a great place to take advantage of the long-term global growth opportunity. And then finally, we'll talk in a moment to why we believe we're a robust business and we're well primed to deliver there. So I'm going to take you through each of those 3 topics in turn now. So first up, we'll move on to the slides on pioneering model. So when we look at how we operate, we have both vertical and horizontal integration. So as I say, we're not a primary producer, but we are acquiring casks, sometimes straight off the still and working with distilleries to produce exactly what it is that we want, turning up with our own wood to take that. And we've been on a journey from when the society was exited Glenmorangie in LVMH in 2015, where we only had around 2,000 casks. So by necessity, the liquid was ready to sell, was ready to introduce, ready to be bottled, and was therefore more expensive. And what we've been doing is driving down that cost over time by buying more new make and young spirit. So for avoidance of doubt, it's the same quality of great spirit from the same great distillers, but buying it earlier in its life to help drive down the cost of that over time. Second area is around maturation. We are active maturation experts. One area to call out, we'll talk about it in first, is the increase in ex-sherry cask influence that we have, which members love. Well, tasting panel quality is the heart of everything we do. So an awards body standard of tasting panel to ensure that everything releases is wonderful. And that move to bring bottling labeling in-house. And overall, that gives us great control in that element, but it's really our ability to deliver that outstanding liquid directly to our members around the world that allows us to capture the full value. And if we go on to the next page and talk about why we are different. So that pioneering model makes it difficult to look at comparators. So we've pulled out 3 things that we think from an investment perspective are important. From a margin perspective first, we have industry-leading gross margins. And that, when we compare to wonderful businesses like Diageo, Pernod, Brown-Forman, on a like-for-like basis, their margins after duty are typically 40-something%. We're at 60%. The second is that substantial asset backing, and the book value, so the purchase cost of that liquid, represents almost 40% of our market cap at the moment. And then finally, from a premiumization perspective, not a lot of data points out there, so we've only shown Diageo, but they made a big point, as have others, about the premiumization trend being seen worldwide. And they called out that their super premium plus portfolio luxury brands grew by 30% last year and now represents over a quarter of their business. By contrast, 100% of what we do is in that space. And if you go on to the next page, you'll see that at the heart, we have two things: the importance of membership that Billy talked about, and being member-centric and having that member value at the heart of everything we do. But we've got to be delivering to them that unique, award-winning, outstanding and unrivaled range of liquids. So typically, we are bottling single cask strength whiskey. So there may only be 200 or 250 bottles of the whiskey ever released. We released almost 1,000 different whiskies last year, with a huge range, 75 different types of wood from there, huge ranges of different distilleries, 10 new distilleries bottled in the last year. So continuing to bring new and exciting, as well as some old favorites. And that's all award quality product. But as I said earlier, it's about the experience that goes with that. And on the next page, you can see two things. One is here, the member rooms, those outstanding member rooms that, as Billy said, have performed so well because our members love those, as well as on the following page, how people interact with us digitally. So you can see on the next slide, the way people engage online. Anna, if you turn over the page, please. The way we engage online with people, the engagement with the Unfiltered magazine, the way they interact with our sites and our content is a really important part of the wider experience. This is not just the bottle shop, it's about being part of a community with knowledge, curation, interaction, and feeling like engaged. So that's why I believe our pioneering model is so good. And if we move on now to the second topic around the long-term global growth opportunity. And on page 19, you can see the premiumization trend. So worldwide, the global Scotch whisky market for ultra-premium whisky is $7.6 billion. And that's growing fast, having grown by almost 200% in the last 10 years. So it reflects that premiumization trend, which is driven by people looking for authenticity. They're wanting to share in consumer knowledge and spirit, and they want brands with provenance, with stories, with history, exactly where the Scotch Malt Whisky Society has always been successful. And on the following page, you'll then see that of that market, $5.8 billion of it is in the markets we are already present in. And $4.5 billion being in the top 8. So we can grow our membership, we can grow the depth of our offering in the markets we're already in, while simultaneously seeding some new markets like the addition of South Korea as a franchise recently as the 10th biggest global Scotch Malt Whisky ultra-premium market. So we can add those other markets into the mix, but primarily the focus is on building depth in the locations we're already in. And even in markets which might be considered mature, like the UK, we've seen 250% growth in that market in the last 10 years, which is wonderful to see. And then finally, we are a robust business and we are primed to deliver. So we talk about our margins, and from a bottle perspective, worldwide, the average revenue per bottle is around about £100, of which about £65 is gross profit. And we have a number of initiatives to drive up that value, both by increasing the value point as well as reducing the cost. And importantly, these are not about pushing price increases through to members. Actually, we think there's ways of generating value by reducing costs and by delivering extra value. So, for example, the new Uddingston facility at Masterton Bond, which will reduce our bottling costs, can take money out of the cost base instead of driving up the sales price for our members. So on the following page, I'll take you through those initiatives chronologically. But the first of them is Masterton Bond. So hopefully this video is going to work and you'll get a little short insight into seeing this outstanding new facility that has recently opened. So hopefully QVT in the morning.
McGrath, Operations Manager at the site at Masterton Bond. It's an exciting time for Artisanal Spirits Company. We've just recently bottled our first few casks on site. I'm looking forward to doing more in the future.
Yeah, so it's a wonderful facility. It represents a real milestone for the business in having that in-house. So we've already produced almost 70,000 bottles. The first 1,000 casks have arrived on site, and we're well on track to moving our operations from an e-fulfillment perspective in-house in the coming weeks and months. And that should drive about 2% margin improvement over time. The second is around that ex-sherry cask program. And in simple terms, buying more ex-sherry casks that delivers a flavour profile that our members love and pay a premium price for. And finally, the impact of that move to purchasing more new make and young spirit that drives down the spirit cost over time. And we will see those developing over time. That takes us on a path from around about 60% margin towards 70% margin. So we turn over into the next slide. Billy will maybe bring to life a little bit around that stock point.
Thank you, Andrew. Yes, so ultimately in this slide, I'll take you through in a second, but back to the balance sheet slide, we have debt backed by appreciating asset. We are utilising that appreciating asset to make sure we invest in the growth of this business and deliver in the future. On the slide, if I talk to the green area, if I take you kind of from the bottom to the top to try and make this as least complex as possible. In our balance sheet, our net book value of all our stock is currently £28 million. Represented with £23 million of cask spirit and £5 million of other finished goods and dry goods. If we were to step that up a level and go to the bank liquidation value, what that's calling it is that the holding of that stock at cost is not, if I use the term, realistic. If we were to go and sell that stock, we would get more than £28 million for it. So what the bank do is they give us a liquidation value in line with our revolving credit facility agreement, because that's the asset-backed agreement. They're essentially saying, well, that is probably its minimum value at something like a fire sale approach. Actually, those casks would deliver around £35 million. What we then move on to is this is the core of what we do and the service we provide and the gold nugget that we bring. Every single cask, if we were to bottle every single one of those casks in a 70cl bottle and sell it at an average selling price for last year, that equates to almost £500 million of revenue for the business, which would deliver around a 60% gross profit over £300 million. So that's this slide is just trying to share we have the appreciating asset that allows us the debt to invest in our business, that therefore allows us to achieve the sales that we can achieve, and therefore the growth that we say we're going to deliver in the next few years. We have strong confidence in what we say we're going to deliver.
Thank you. And that obviously goes without saying, but on the next slide, at its heart, we are dependent on our people, and we have some wonderful people across the business who feel passionately about us. And that's, I think, a real sign of the strong culture that comes through. And even where we've grown headcount significantly, I think that culture has deepened and strengthened, and that's reflected in the employee engagement scores across the business. So I'll finish off by talking about current trading on page 27. And in short, Q1 revenues have been broadly flat year on year, and it's worth pointing out a few things on that. One, Q1 2022 was our fastest growth period of the year, so we had exceptional growth in that period. So we're lapping over very strong growth. The second is Q1 is our quietest, smallest revenue quarter. So overall, it leaves us with a feeling that our growth phasing is in line with our expectations. So it gives us no cause for concern over our ability to deliver the full year consensus forecast for this year. Now, that's been coming through in growth, particularly in the UK venues. As Billy said, an all-time record performance in December, followed by our best ever January, followed by our best ever February. That's been wonderful. But alongside that, continued momentum in Europe, which has performed very well. Now, on the flip side, the COVID impact in China, where there was lockdowns from around April, May through to November, did impact on our ability to recruit last year. And when those lockdown restrictions eased at the tail end, there certainly was widespread, basically people infected with COVID. And we saw the impact of that sales in the early weeks of this year. During February, The indications from the market was that that was easing, and by March, we're seeing that coming through in the numbers. So again, back on track. And what can we expect as we look forward? I love the little graph on the right-hand side. It's nice at the start. It was one block on the left and one block on the right. And it's nice being able to come back each time and completely fill in those blocks across as we're on track to deliver our ambition of £30 million worth of sales next year. We've done a lot of the investment for the growth of the business to support that. A bit more to come on IT and tech this year, as well as the delivery from Masterton Bond to support from an operational perspective. But overall, that leaves us in a good position as we look forward. So that's it from the presentation just now. I can see that some questions have already started to come in. Maybe hand over to Hannah to sort of moderate and pass those across to us.
I certainly will. Thank you, gentlemen, for that helpful canter through. Now, let us scroll through. What is your strategy for recruiting new members, and how does your approach vary by country?
So ultimately, if you think about our kind of a whisky journey through, we are typically targeting people towards the middle of their experience with this. Not somebody trying a whisky for the first ever time, but we're looking to recruit people who are looking for variety, looking for something different, something exciting, something with a unique personality or story. So that's the kind of people we're looking to recruit. Now, how do we deploy that worldwide? Varies. Now, one thing is worldwide, our best recruitment tool is member referrals. Our members are our biggest asset. They're our best referral. They're our biggest advocates. Alongside that, in the UK, we have an omni-channel approach. So the 4 member rooms themselves are a key recruitment channel as people come in and experience the in-person there. In places like the US, YouTube is quite a popular channel as people look. Another avenue that is popular for us is around true influencers, not in the kind of social media sense, but whisky bloggers, people who write and review whiskies. Their websites are a hotbed for people coming looking to hear about new whiskies and understand. We use them as a recruitment tool. We call them affiliates to refer across. As well as at the other end of the scale, you know, venues, festivals and events. So in China, for example, festivals are a key part of the recruitment tool as people get to see us and talk to us and understand the proposition. And that's one of the reasons membership didn't grow the way we wanted to last year, because online recruitment in China was fine, but the lever around in-person recruitment wasn't available to us. That started to return. Guangzhou Whisky Festival in February went well, and I'll be out at the Beijing Whisky Festival at the end of April. So we're starting to see those come back. Hopefully that helps.
Certainly does. Thank you. Does the Scottish Malt Whisky Society have any plans on opening any other tasting rooms in the UK or abroad?
So the short answer is yes. We had actively looked at a potential venue within the UK, which we were proceeding with at the tail end of last year. We had paused that in the context of some uncertainty around, you know, what the impact of cost of living might be, consumer behaviours, etc. However, as Billy said, the UK venue performance in December, January and February was our best ever for each of those 3 months. So that's been great. And I think that might come back to the table soon. Internationally, we are looking at that. In Japan, we've opened what they call The Base, which is a sort of extension of the office that has a dedicated bar area where we can host our own events and tastings on site without it being a proper member room like it is in the UK that's open as a bar all the time. So the short answer is yes, but it's not, you're not going to see suddenly 10 or 20 appearing, but 1 or 2 over the next year or two. Yes, that's certainly something we're considering.
Yes, thank you. What has happened to the revenue per member in China? Is it wildly out of line with other areas, and are they reselling?
So no, we don't believe they're reselling. There's certainly a collection element there, but I would say 3 things in China. 1, the average member there is buying around about twice as many bottles as they are in other markets. The second is there is a price premium on a like-for-like basis. So the same bottle we retail for a higher price in China. And the third is proportionately the overweight on older, rarer, more expensive whiskies anyway. So it's the combination of those 3 factors you see coming through in an average annual spend of £3,000 versus a group global average of around 600.
Okay, a couple of questions here on the departure of David Ridley. Can you just talk a little bit more about why that change has been made?
Yes, absolutely. I mean, the business grew fantastically under David. We were something like 3 times the size that we were when he joined. And over the course of that 6 years, we've made a huge amount of progress. And we can sit here and say that we're in such a great place on stock because of the developments we made under his leadership. 2 years post-IPO, we delivered everything we wanted to, and at that stage, mutually agreed that it was an opportunity for David to take advantage of other options. So it was a very pleasant experience to have gone separate ways in a very positive situation.
Thank you. I'm sure everyone in this call will want to know the answer to this one, but what is the longer-term strategy towards dividends? Is there a chance that pre-tax profits are achieved in the second half of the current financial year? I would point people to our forecasts at that point, because management shouldn't really be.
I don't believe that any of the forecasts point to PBT this year. From a dividend policy, I think in due course, of course, we will come out and talk about dividends. But in the short term, the focus is on delivering the profitability and the cash generation on which a dividend policy would be based. But in the short term, we lost after tax £2 million last year. We want to make sure that that is positive and sustainable, and then we will talk about dividends, but it's in that order.
Okay. There's a question here about your best ever Jan, Feb, March squaring with flat revenues, but I think perhaps if you want to make any further comment on outlook.
No, I think it's probably just to clear it up. When I said best ever December, January, February, it's specific to venue performance. So you're right to call it out if there was a misunderstanding, but venue performance December, January, February was venue specific best ever performance rather than overall, because you're right, revenue is relatively flat, but that December, January, February column was specific to venues.
Thank you. Can you give us a bit more detail on the RBS valuation methodology? 35 million sounds low relative to the 490 at retail, and just a small subsequent one. How much of that is duty?
Okay, so the RBS valuation is essentially an orderly liquidated valuation, what we call. So essentially, if we had to fire sell everything in less than 6 months, what could we get in brokering it all out as casks? One thing I would note is that's based on their valuation from the start of 2022. I would expect a substantial uplift in that this year. The second thing is that their valuation methodology is distillery agnostic, meaning that they say a 20-year-old single malt is worth X pounds per litre of alcohol, regardless of whether that spirit was distilled at Blair Athol or Macallan, which we know is not true and therefore doesn't reflect the true. The idea and what Billy, I think, brought to life well is to say the point is we have already accrued substantial additional value by our policy of holding that stock. It will come through in time when we sell those bottles. Now, when we then compare it to the retail value, the whole point is that retail value is the price we would charge a member for a bottle. And therefore, it includes all of the rest of it. It includes our margin, it includes duty, which is a big number in the UK, maybe £14 a bottle, but in the US, it's only $1 or $2 per bottle. So it varies by market, but it also includes all the other costs, the bottles, the shipping costs, the freight, the delivery charges, and all those things that exist in other markets. Hope that helps.
Certainly does. Thank you. Will you be looking to increase your offering of other spirits, such as rum and cognac?
So certainly other single cask spirits is something we've always thought is of interest to members. So people who love outstanding single cask, single malt whiskey may like these other things. We have found a variety of responses to those. So I think we will continue to keep them as part of the wider range, but I don't see them becoming part of the core proposition. So rums, cognacs, armagnacs, we've done some single cask gins, etc. Bourbons, rye, other world whiskies will continue to exist as part of that space, but we don't see a giant latent demand from within the membership for a huge amount more armagnac, for example. So
no, clear. The Uddingston facility, what will be the impact on the cost of bottles?
Yeah, so as I said earlier, the cost of bottling is now an in-house cost. So we still have to pay to do it, but we don't pay the third-party margin for that. And to be clear, that's about ways of us generating extra value without having to increase prices to members. So this won't result in a cost reduction to members. It's profit that will come through to the company, but it means we can increase margin without sitting here saying we need to push up prices to deliver that.
Okay. Now, you commented yourself about engaging with influencers, whiskey influencers. Can you talk in more detail about the price dynamics for your whiskies and comment on that? An American investor recently published a study of luxury resilience on social media. Are you a luxury company?
There are certainly elements of the range which are luxury. And if we think about our price points, and focusing here in the Scotch Malt Whisky Society, from bottle prices in the high 40s, 45, 50 pounds, through to £2,500. There is a wide range in there. In general, we are looking to be around the midpoint of comparative prices. So not at a huge discount, but certainly not trying to be price leaders in that space, and certainly not trying to overcharge anybody. When we did have to pass through price increases at the tail end of last year, we deliberately tiered those. So at the lower end, we made no increases to bottle prices that, you know, a £48 bottle is still £48 in a like-for-like release, whereas at the higher end of that range, around the real luxury end, those prices did increase by much more. But even in that space, I would say that's where we are the furthest below comparative other independent bottlers or proprietary brand bottlings in that space is where we are the furthest below that price points.
Okay, thanks. One for you, Billy. I see there is a revolving credit facility of 21 million. Would it make sense to look for a term or asset-backed financing structure which may attract a lower charge?
I think in response to that, we're pleased with the revolving credit facility. We've had a partnership with RBS, if that's the right word, an agreement with RBS for a few years now. We engaged on what we call the accordion element of that contract at the back end of last year, and they're very supportive of increasing that £3 million. Also, to call out, that did result in a reduced interest rate itself, so a 0.25% reduction in that rate. So it may be a fair point, but at this moment in time, we do believe we have a really good agreement with RBS and a good working agreement. Yeah. So we'll see in the future, but we're happy with the revolving credit facility at the minute.
Yeah, and to be clear, it is an inventory-backed RCF,
it is, yeah.
And we moved away from an ABL because it was not a committed facility. So we moved to this, which is a committed facility that gives us certainty, but also the structure that we have has what's called a springing test. So as long as we hold the stock, which we do, there are no operating covenant tests. Correct. So again, it leaves us in a really good position. So it's a good facility with a good and supportive bank.
Okay, brilliant, thank you. US ambitions, obviously something that has been mentioned in previous presentations, not so much in this one. Can you talk us through where your thinking is on this?
Yes, of course, and I should have covered that at the end there. So we continue to think that there is a big opportunity for us in the American whiskey space. We did work last year around consumer testing, market research, brand development, proposition evolution, which is all really valuable to us and will continue to inform our thinking. So we think there's some great opportunities there for us. But if I step back slightly and say, how does ASC want to operate in North America across the Scotch Malt Whisky Society, which already exists and is growing in America, across a new opportunity in American whiskey, the launch of J.G. Thomson and its first exports into the US? Actually, is there a wider opportunity to structure something greater and bigger in terms of how we approach North America? So we've certainly not gone cold on the idea. The investment today is not wasted by any means, but I think it's right to just take a little bit more time to assess what the right path is, so that when we go, we've got given ourselves the best chance of success.
Okay, thanks. A couple of sort of member type questions here. Do your members ever get frustrated because they'll never be able to purchase a particular blend or style of malt whiskey again, given that the casks are unique?
Yeah, so the word blend there is slightly misplaced. So, of course, when somebody finds something that is wonderful and they love, of course they'd love to have another one. But that's part of the fun, the thrill of the chase of maybe the next one's even better. And what we are very good at is we provide guides and clues and tips and the tasting notes, the flavour profiles, which allow people to say, well, what elements of that whiskey was it that you really loved, that really worked for you? So was it the fact that it, you know, had the flavour profile from an ex-sherry cask? Well, maybe here's something else. Or was it that, you know, the real personality of the underlying distillery coming through? Or what was it? And allowing us to trial a range of other things with people. So yeah, of course, there's a little bit of sadness. The US the Australian members have a thing with they call it the bottle kill, when they have the last dram from the bottle and they sort of share their thoughts and notes, and they show the bottle on its side when it's empty with the last dram. And it's quite a kind of cathartic experience for members to finally finish the last dram from the bottle that was on the shelf. So, yeah. But it's part of the spirit of what the society is about. Whereas J.G. Thomson, by contrast, has a kind of styles, so more of a kind of house style. So it's still small batch and still limited edition. But if you like the smoky profile of batch 1, you're probably going to like the smoky profile of batch 2.
Catering to both. Excellent. Well, there's probably a nice little segue then onto this next one in terms of how you view venues. Is the experience about the evening out, or is it more focused around purchasing whiskey and finding the replacement for that perfect bottle that you finished?
I mean, really, it's about whatever way members want to engage with us. We have the full range. We have people who use the venues almost as bottle shops, and they come and they just want to talk to the staff, get some guides, similar to how people use the Dram Search team on the phones or by email to ask for tips and recommendations. We have people who come to whiskey tastings and events to learn, to get knowledge, to meet the master blenders from the distiller, to meet our teams. We have people who just come for lunch and to be in a wonderful setting, wonderful environment, and really enjoy the atmosphere of these outstanding whiskey clubs. So it's the full range, and really, to me, it's as long as people are loving being there and loving part of it, it's the full range. But we do have everything from evening visits to dinners to events to tastings to knowledge gains to all kinds there.
Okay. And then sort of looking around across the demographic, the move to rebranding and traditional green bottles versus newer, brightly coloured bottles, is that an attempt to target younger members? And if so, how's it going?
So I would say that the core range is still in its traditional green bottles, those that are synonymous with the run and have been and they remain unchanged. I assume that the reference to newer bottle styles is when we introduced, internally we call it the Heresy range 5 or 6 years ago, which are kind of small batch blends. They have been fantastically received by members, but they, again, a little bit like the single cask spirits, they are not the core proposition, but there's something else, there's something wonderful on top that we found members also love to have. So that's not about a change in the core proposition, it's about adding something else on top that members love. And the feedback has been very good.
Brilliant. I think you covered venues overseas, appetite to open venues overseas.
So they're certainly part of the plan. As I say, the Japan, as they call it, the base. We would look at them. I think if we were to do something like that, it would range. So if we were to do something in near Europe, probably quite similar in setup to how we operate in the UK. If we were to do that further afield in China or something, we would probably work with a hospitality franchise partner to make sure we deliver our soul into the venue, but we don't have experience of actually running a hospitality venue there. So it might depend on where the market is, but it's certainly something we would actively consider.
Okay, brilliant. And this one's definitely from a member. Do you have any more similar releases to Conkers for Bonkers hidden away, especially given the 40th anniversary?
Yes. So Bunkers for Conkers was it's an absolute cracker of a dram. And that, you know, when I talked about the range, that's at the £2,500 a bottle range, and was wonderfully received. It is absolutely outstanding liquid. And I'm pleased to say that, yes, we absolutely have some gems in store for members, because it is the 40th anniversary of the society. And that will range from things at that end of the market, which is clearly for a very specific demographic, but also things that are much more achievable at all levels. And we've already done our first release, which is the Maverick, bottling in March. which was a much more accessible price point. The whole point about the society is allowing everyone to try and get involved in these things, and that was very well received. But also, as a general point, we continue to have access, not only within our existing stocks, but access to buy more. And last year, we spent a couple of £1 million on some casks, the youngest of which was 26 years old, and some of them were well over 30 years old. So we continue to be able to add some, and they are from outstanding distilleries. So we continue to be able to add them in. So I could just see a follow-up question that popped up about the venue in the USA, because I didn't touch on that and I had meant to. We can't add venues in the USA because of the 3-tier system and their rules around alcohol distribution and prohibition style rules around a tied house. So we can't operate a similar model. I was out in the States a few weeks ago, went to some brilliant partner bars, well, we can't call them partner bars, outstanding whiskey bars where you can have a dram from the society, like Jack Rose in Washington, the Brandy Library in New York. So there are some brilliant bars in those cities where you can go. We use them as anchor points where we host events, tastings, outturn releases, but we can't operate the same model in the US.
Do you or will you offer training courses to help members and future members appreciate the nuances of a good whisky?
Yes, it's certainly something we always want to do more of, to allow people to really engage and enjoy. And quite often, some of the comments are a bit tongue-in-cheek and they're reminiscent of flying saucers, kids' sweets, and all kinds of things that are reminiscent. And I still remember the first bottle I ever had, which was called Shed Soup. And the tasting note said it tasted like sitting in your shed on your allotment, reading a newspaper while someone nearby has a bonfire. And I tasted it and thought, yeah, I get that. So it's certainly a fun part of the society. We do some of those formally through in-person activations. I think more generally, education is a space, maybe something slightly more formal that we could do more of. But there are lots of good ideas. It's all about priorities, but certainly something we'd love to do more of because members love being part of that.
Oh, to be a copywriter for the dram tasting notes. It sounds fun. Right. Well, I think other than that, we're about finished. There
was one other thing that I just hadn't mentioned, which is around we are going to be investing more in tech over the course of this year, and one of those things is about we've got some brilliant systems. NetSuite's a great ERP system. BigCommerce is a good web platform, but what we are going to do is we're going to make sure the data architecture set up behind them supports our ability to go and do new things. And that includes, for example, a desire to replace the venue till systems, but which are integrated with the back end of our existing systems. So to be able to do that, first of all, we need to decouple those two systems before we can obsolete the old till system. So that will take a little longer, but the background work, the core, building that strong foundation to grow faster happens this year. And then the sexy front end stuff from member experience and journey happens next year. So the spend happens now and members will start to see the benefit of that next year.
And you have a good range of sort of dram prices within the venues, which allows people to access at different entry levels.
Yeah, I mean, it's what's hard is because we have 1,000 new whiskey releases each year, trying to create some coherent pricing structure that people can relate to across that is challenging. We do always actively look at them. What we try to supplement the range of dram prices with is things like malt of the moment, premium malt of the moment, so that there are opportunities to try other drams, other whiskies within that range, because it is hard to get into the we can't have individual price points to point all, so we don't have quite as smooth a range as we would like, but overall it's the balance of something that is good value and something that is understandable without too much complexity.
Well, thank you. There's obviously some frustration that the share price isn't higher, which I suspect the management team share.
Absolutely, and I think we're very conscious of that, but we're also conscious of the elements that we can control, and that's twofold. One is deliver what we said we were going to, and it's pleasing to sit here for the 4th time post-IPO and say we have delivered on or ahead of everything we said we would do. That's financially and strategically, so it's really pleasing to be able to say that. But also making sure that We do sessions like this. We are out there talking about the business. Billy and I are in London for a few days, meeting with a wide range of people to tell them more about the business, extend visibility, etc. Yeah, so it's been good. And
good.
Again, I see a final one popping up, but we do, and I sort of skipped over it. We have a wonderful team of people working here, and that ranges from boots on the ground. The people in the bars and the member rooms are wonderful. We've added some great quality, some real outstanding people across the Highland, as well as a really good quality board led by Mark Hunter, the chair at the top, former chief executive Molson Coors, who's been brilliant from a leadership perspective. The additions of Helen Page and Leslie Jackson has added some more great gravitas to the board, as well as the other people who are still there, who have, Gavin Hewitt's the former chief executive of the Scotch Whisky Association, Paul Skipworth, our deputy chair, former chief executive of Glenmorangie, Mark Berringham, who has outstanding experience in Asia and from LVMH days. So we have, across every level of board, team management, the quality and size of team we need to be the business we're going to be in the future, leaving us a bit overweight for now, which is nice. Good.
Well, gentlemen, thank you very much. Congratulations on, as you highlighted yourself, a fourth set of results where you have consistently delivered. And on that note, we wish you well for the rest of your roadshow. Many thanks.
Thanks very much, all. Thanks for listening.
Thank you.